let's talk about BlueStone Jewellery, a share that has made debut on the D Street at present, listed at 2% discount. The stock did open at 510 on NSE and 508 on BSE against its issue price of 517 per share. Now, what is the company and the management's focus with the IPO and the usage of IPO proceeds? To talk and discuss at large on the same, we have Gaurav Singh Kushwaha, CMD and CEO, BlueStone Jewellery, joining with us. Mr. Kushwaha, good afternoon. Thank you for giving your time to ET Now. My first question on the IPO in particular, how do you plan to mobilize and allocate the IPO proceeds? Is the focus going to be on debt reduction, new store rollouts, or strengthening the online platform space?
Sure. Hi. Thank you, Mansi, for hosting me. Excited to be here. I think just correcting on the share price, I think it's 5 to 6% above the list, above the issue price right now. In terms of proceeds, I think largely in line with what we had mentioned in our objects, which is for working capital. We plan to open around 70 to 80 new stores in this FI, and then the store rollout will continue subsequently also. So our stores require inventory. Inventory for us largely is gold, which is an asset class in itself. Bulk of the capital will go towards inventory. And I think on equity and debt, we maintain a comfortable ratio of less than one, and we continue to maintain that.
To equity ratio, but now that you're listed, Mr. Kushwaha, help us with some forward-looking statements. What growth guidance are you setting for the next 2 to 3 years in terms of your revenue, your store count, and profitability, of course?
A lot of these things are output metrics. As a company, we are generally and fundamentally focused on inputs. I think the number of stores that we open, the kind of same-store sales growth that we intend to deliver, or that we have been delivering, we continue to deliver strong same-store sales growth. I think fundamentally jewelry is a category where very strong same SSSGs can be delivered over longer terms, over multiple years, multiple decades also, as we've seen in other companies also. So I think our core focus is to increase our distribution footprint and to keep delivering double-digit SSSGs.
Absolutely. Gaurav, BlueStone has always positioned itself as a strong omni-channel player. And while I was visiting the website of the same, I should say quite a creative one. So how do you see the split evolving between physical retail expansion and online sales growth?
Yeah, I think looking at any business which is and kind of segregating it at a channel level, in fact, trying to segregate customers or consumers also at channel level, it's kind of very archaic. The way consumers behave these days, almost all of us are glued to our mobiles. The average time spent in India on let's say social media or consuming other sorts of content, commerce content or otherwise entertainment content is, I think the average time spent is between 2 to 3 hours. So that gives a huge opportunity to today's brands, today's players to actually create a very strong pull online. Now, different categories behave differently. Many of the categories where the price points are low and the comfort, etc., required to make a purchase is lower, you can actually do the entire thing online. But in several of the categories where the touch point, where the price points are high, where the value of experience is significantly higher, online alone generally is not able to do the entire thing. But online has a very, very important role in creating that pull, in generating that demand. But without offline support, it cannot convert it. It's like buying a car. You can do a lot of research online in trying to decide which car you want to buy, but it's very unlikely that you're going to press a buy now button on a car portal. So I think this is the kind of this is what we are also seeing, and that's why the way we perceive our stores is they are extension of our online presence. Our engagement, our first touch pointing with customers is always online, and then once that engagement is developed to a certain extent, after that comes our store and and uh, and push that touch pointing or push that experience into sales.
Okay, and Mr. Kushwaha, before we let you go, just want to get your outlook on gold prices staying elevated on the back of that. What demand trends are you seeing from consumer behavior? And of course, the GST rationalization debate that's active. Do you believe any change from the current 3% GST could take place on jewelry?
Uh, so two different questions. One is, I think, when gold is very erratic, it's very volatile. At that time, what we've seen, the demand softens generally. People are just not very sure if they should buy it today or they should buy it tomorrow, or maybe they should have bought yesterday. So I think all those thoughts are there in people's mind, and hence the demand softens at that time. I think in general, a rising gold gives people a lot more confidence in the category. We have seen in India, right, the last 20-25 years, gold has generally consistently gone up. There might have been those few patches of few months when it would have dropped, but generally it just goes up. And I think that gives people a lot of comfort and a lot of confidence in the long term value of their buying. Just that if it moves 10-15% in, let's say, span of a week, then people are a little jittery whether it will come down, whether I should have bought it 1 week back, and so on. So I think in general, consistently rising gold is good for the industry. In short term, when it's extremely volatile, it's not. It hurts the demand. For GST, I think the current GST is 3%. Government, I think there's a proposal of consolidating multiple GST slabs into 5% and 18%. Between 3% to 5%, we don't see significant impact on the demand. I think because that 2% movement in gold price is something that generally, in fact, last 4 to 5 months, that has happened several times. So in terms of pricing, there's not going to be too much of an impact. I think very high GST at times leads to illegal channels or
Right.
kind of gaining prominence, but I think 5% is not that.
That's right. Mr. Kushwaha, congratulations for being listed on the equity markets, and thank you for joining with us and giving your views, and all the best. Wish you luck for the coming quarters.
Well, thank you, Mansi. Thank you.
Thank you.
Sneh.